Hello and welcome to this short, you could say, course or lesson lecture titled Basis Periods Simplified, brought to you by ASWATAX. My name is Omar Aswat. Now, as you can see from the title, this is a video which will outline, explain, and most importantly, demonstrate the basis periods, assessable profits, and overlap profits. A key area of study in taxation as well as in practice, but unfortunately most commonly misunderstood or not understood at all by students and I must say practitioners as well. Now myself, I used to sort of avoid this topic as well, even when I was studying for CTA. And I think the reason is because when you look at the textbooks, they have massive chunky paragraphs, which to be honest is no benefit to anyone when it comes to understanding basis periods. And many students do approach me for this, to study this specifically. And we go through it using examples, demonstrations. And I honestly feel that visualizing the whole process will be of most benefit to you. Take notes whilst we go through this video. Understand, don't forget to like if you benefit, comment on any questions, your thoughts, your understanding. Share with those who may also benefit. And most importantly, subscribe to our channel where we will bring you loads more videos like this. So there are 5 types of scenarios that need to be looked at when studying basis periods and assessable profits. Only 5 types, only 5 circumstances that can occur, and 2 of them are pretty straightforward. The other 3, which comes when you're looking at the second tax year, are the ones that most people stumble upon. And therefore, 5 types, you just need to get comfortable with these 5 scenarios. The first one is the actual basis, which is relevant on commencement of trade. So the actual basis relevant when a sole trader, a partnership commences trade. Just bear in mind that limited companies do not have basis periods, not relevant at all. Basis periods are only relevant for sole traders and partnerships. Limited companies have separate rules and are taxed under corporation tax. Sole traders and partnerships, so partners within a partnership, as you would know, are taxed under self-assessment. And that's where basis periods come into play. So the first type is the actual basis when commencing trade. Second, third, and fourth would be looking at specifically the second tax year. And the key rule here is the second tax year always taxes 12 months of profits. Can be losses as well. Always 12 months have to be looked at for the second tax year. So that's why you have the 3 scenarios. The first one being there is a 12 months accounting period ending in the second tax year. There is no accounting period ending in the second tax year. So that's usually when you have a long accounting period exceeding 12 months. And you have an accounting period ending in the second tax year, but it is a short one. So you might have 6 months, 8 months, less than 12 months. And what we have said just now is the second tax year always taxes 12 months of profit. So that's what you have to always remember. The second tax year, you have to be taxing 12 months of profits or losses. If that is not the case, then there is an issue, and that would be if there is an accounting period ending, it would be the current year basis. If there is no accounting period ending in the second tax year, then we come back to actual basis. Okay, this is just an introduction. We'll go into this with fully demonstrated examples. And finally, you have the basis periods on cessation of trade. So actual basis commencement and cessation, fairly straightforward. We will look at examples for that as well. And we will go into a lot more detail when looking at the second tax year. So let's start with the commencement of trade. And the question is, a sole trader or a partner in a partnership begins trading on 1st Jan 2020. And it is a 12-month accounting period ending 31st December 2020. Profits are £12,000. So we have commenced on the 1st of Jan 2020. 12 months to 31st December, £12,000 worth of profits. What you need to look at first and comprehend, understand, accept is when did the individual begin to trade? In which tax year does the 1st of January 2020 fall under? And that would be the 2019-20 tax year. Okay, 1st of Jan 2020, think about it, falls in the 1920 tax year because the 1920 tax year starts 6th of April 19, ends 5th of April 20. 1st of Jan comes before 5th of April 20, 2019-20 tax year. So the first tax year would therefore be 2019-20. The actual basis is relevant here. So actual basis, what are the rules for the actual basis? You effectively tax everything from commencement of trade, okay, up until 5th April at the end of the tax year. So actual basis, everything goes to 5th of April at the end of the tax year. Keep that in mind. So therefore, 1st of Jan to 5th of April, January, February, March, 3 months, you don't count the 5 days. Treat the 5 days separately, and then the remaining days of April would be treated as a full month in the next tax year. So we have 3 months out of 12 subject to tax in 1920 times the 12,000, you have £3,000 assessable profits. Okay, 3 months out of the 12 has been taxed in 1920. Now this nicely leads you on to the second tax year, which was you have a 12 months accounting period ending in the tax year, in the second tax year. So let's go to the second tax year, which would be 2020-21. And as you can see, 31st December 2020 falls in 2021. You do have an accounting period ending in the second tax year. And therefore, let's look at the rules for that. So if you do have an accounting period ending in the second tax year, you come on to the current year basis, which is the end of the accounting period. You look at the date, whichever tax year it falls under, that full accounting period is subject to tax in that tax year. So there's a massive disconnect, obviously, between accounting periods, because a sole trader partnership, they can decide any date for the accounting period. They can have a number of months, 12 months or more, or less than 12 months as well, for that matter. But the tax year is fixed. Tax year would be 6th of April to 5th of April. And the current year basis is effectively saying that you look at the end of the accounting period, determine which tax year it falls under. So 31st December 2020 falls in the 2021 tax year, right? Because it goes from 6th April 20 to 5th April 21. And therefore, the full profits or losses are taxed in that second tax year in this instance. So we're looking at 1st Jan 20 to 31st December 2020, right? And therefore, you will be taxing the full 12 months because you have to tax a full 12 months in the second tax year. £12,000 would be subject to tax in 2021. Now, this is where the disconnect happens, and this is where overlap profits come into play. Because if you think about it carefully, 3,000 has been taxed from 1st Jan to 5th of April in 1920. 12,000 has been taxed in 2021, but it's coming from 1st Jan again to 31st December. So 3 months, you can already tell, has been taxed twice. So that would be your overlap profits, £3,000. There are 2 ways to check this. I highly recommend the timeline, which is you simply draw out a timeline. You have your commencement, which is 1st of Jan 20. You have the end of the accounting period, 31st December 20. And you have 5th of April somewhere there. 1st Jan to 5th of April 20 was taxed in the 2019-20 tax year. And 1st Jan 2020 to 31st December 2020 was taxed in the 2021 tax year. So as you can clearly see, this is the bit of overlap. This element has been taxed twice. Therefore, £3,000 would be your overlap profits. A way you can check if you've done it correctly is we have profits of 12 months in the accounting period year ending 31st December 2020 of £12,000, right? However, we have taxed 15,000. Okay, we have taxed 15,000. Therefore, £3,000 would have been taxed twice. I hope that makes sense. Now, always keep in the back of your mind, and I'll mention it again and again, the second tax year has to always be a 12-month period. So you have to tax 12 months in the second tax year. So what happens if we have a long accounting period, which goes on for more than 12 months, and there is no accounting period ending in the second tax year? Again, best demonstrated with an example. A trader begins to trade on the 1st of Jan 2020 up until for 18 months ending 30 June 2021. So 18 months accounting period begins 1st of Jan, commencement 1st of Jan 20 to 30th June 2021. And let's say the profits are £18,000 to make it easy for calculations. Now, looking at what we looked at, the first tax year, what do? We look at the date of commencement, and we know that is 1920. So the first tax year would be 2019-20. And what do? You tax on the actual basis. What does the actual basis do? Effectively, you tax from commencement 1 Jan 2020 up until 5th of April at the end of the tax year. That would be 3 months. We said January, February, March, out of an accounting period, 18-month accounting period, ending 30th June 2021. So we take 3 months out of the 18 months, multiply it by the profits of 18,000, gives you £3,000 assessable profits in the first tax year, 2019-20. Now we come to the issue whereby the second tax year would be 2021. Is there an accounting period ending in the second tax year? That's what needs to be questioned. The answer is no, because the second tax year goes from 6th of April 20 to 5th of April 21. Our accounting period ends on 30th June 2021. So that's actually in the 21-22 tax year, right? Okay, so we'll come back to that. So what do we do then? In that scenario, you go back to the actual basis, okay? What does the actual basis do? You tax anything up until 5th of April at the end of the tax year. So 5th of April 2021. And we've taxed up until 5th of April 20. So we simply do 6th of April to 5th of April 21. Now, I always say this and I always think this, but why didn't they just leave it as simple as that? Which is 6th of April, anything between 6th of April and 5th of April is taxable in that tax year. Straightforward, right? I still do not know why we have all these basis periods issued, assessable profits, overlap profits. They talk about tax simplification, but I think this is an area that needs to be looked at. 6th of April to 5th of April would be pretty straightforward. So 6th of April 20 to 5th of April 21 is a 12-month period. 12 out of the 18 months multiplied by your 18,000 gives you £12,000. Okay, £12,000 subject to tax in the 2021 tax year. That's when we come on to our third tax year, okay, which is 21-22. And do we have an accounting period ending in this tax year? Yes, we do. We go back to the current year basis. How do we look at the current year basis? You look at the end of the tax year, so 30th June 2021, and you take 12 months, as we say, have to tax 12 months of profits. You take 12 months up to 31st June 2021. So that would be from 1st July 2020 to 31st June 2021. A lot of students ask me, where did this 1st July come from? It's simply looking back 12 months from 31st June 2021. You look back 12 months, the accounting period, the 12 months would have started on 1st of July 2020. Again, we have 12 months, right? At 18,000. Taxable assessable profits are £12,000. Now we need to consider, as usual, overlap profits. Let's draw a timeline. So we started on 1st of Jan to 30th June 2021. We'll draw a large one here so we can understand fully. So we started on 1st of Jan 2020, 30th June 21. We have 5th of April somewhere here, 20. We have 6th of April, let's say 6th of April here, and let's say 5th of April 21 over here. And we can put in 1st of July 20 somewhere there. Okay, this is just for completeness purposes. I do recommend it to you in your exam as well if you are struggling or if you can't think about it properly. Visualizing the basis periods is the best and most effective way. So bright colors out, we have 1st of Jan to 5th of April on the actual basis, which was taxed in 2019-20. The second tax year, we simply taxed from 6th of April 20 to 5th of April 21. So that started there till about there. That was the 2021 tax year. And the third tax year, we taxed from 1st of July 20 to 31st June 2021, which was in the 2021-22 tax year. As you can clearly see, two colors are mixed there. That is our overlap profits. How many months is that? July, August, September, October, November, December, Jan, Feb, March. 9 months. Okay. So 9 months effectively has been taxed twice. Therefore, overlap profits equals 9 over 18 months. Okay, we had 18 months accounting period. 18,000. 9 over 18 times 18,000 gives you £9,000 overlap profits. Now, overlap profits, there are some disadvantages of overlap profits, and you'll understand more when you watch the losses, basis periods when you have losses video. But the negatives of overlap profits is that you are immediately taxed twice, right? You are taxed twice on profits that have been gained once. And the second disadvantage is this 9,000 can only be relieved on the change of an accounting date or on cessation of trade. So usually when you start a business, you're looking long term. So that 9,000 might be relieved in 20 years when you cease trading. So you'll have your cessation of trade profits. Let's say that's 20,000. You deduct the £9,000, you'll only be taxable on £11,000, which is all good. However, due to inflation, that £9,000 would be worth a lot less than it is today. So keep that in mind as well. How do we check if that 9,000 is correct? We had 3,000 plus 12,000 plus 12,000 gives you 27,000. We only had 18,000 of profits. 27,000 less your 18,000 equals 9,000. 9,000 overlap profits, £9,000 has been taxed twice. Now, the fourth scenario, the third one with the second tax year, is when you have a short accounting period ending in the second tax year. So take a look at this example. We start trade on 1st Jan 2020, and we have a 6-month accounting period ending 30th June 2020. Okay, and our profits are £6,000. We have done that for any reason, doesn't really matter. And then we go back to our normal 12 months accounting period, which is from 1st of July 2020 to 30th June 2021. And let's say 12 months of profits, right? So back to basics. The first tax year, we look at the commencement of trade, 1st Jan 2020, which falls in the 1920 tax year. We're on the actual basis, so 1st of Jan 20 to 5th of April 20. A lot of students start saying 21. We're still in 2020. 1st of Jan 2020, 3 months out of, this is a 6-month accounting period, so don't get that confused, times by £6,000 equals £3,000 assessable in 1920, the first tax year. The second tax year, would be 2021. Okay, however, we do have an accounting period ending in the second tax year, 30th June 2020, 6 months to 30th June 2020. However, the rules say that you must tax 12 months in the second tax year. So we have 6 months, we have a bit of an issue, we have to take 12 months. So what do? We have to effectively take 1st of Jan 2020 to 31st December 2020, that's 12 months. And that would be a mix and match of the two accounting periods. So you have 1st Jan 2020 to 30th June 2020, which was our £6,000. And then we take 6 months from 1st July 2020 to 31st December 2020. What is the calculation there? We're taking 6 months out of the 12-month accounting period, which had profits of £12,000. That gives you £6,000. Assessable profits for the second tax year 2021 would be £12,000. The third tax year, 21-22, onto the current year basis, do we have an accounting period ending 21-22? Yes, we do. 6th of April 21, June 21, and then 5th of April 2022 we do have. So effectively we take 12 months up until 30th June 2021. And that would be your £12,000. Now for this scenario, there are two overlap profits that come into play. And again, we'll demonstrate it using a timeline. We started on 1st Jan 20, 30 June 21. Okay, we just simply put all the dates that you can see in. Any date you can see here, you put it in. So we have 5th April, 31st December, June. I see July there as well. Let's put those in. So we have 5th of April 20. We had 1st of July 20, and somewhere there we have 31st December 20. As I say, you look back to your workings. Any date you can see here has to be on the timeline. The first tax year, we had 1st of Jan to 5th of April 2020 on the actual basis. And this fell in the 1920 tax year. The second tax year, we had from 1st of Jan to 31st December 2020. 1st of Jan to 31st December 2020. So that would be going up until there, which was the second tax year 2021. And the third tax year, we have 12 months to 30th June 21. So that would be 1st of July to 30th June. 1st of July to 30th June, which was in the 21-22 tax year. As we say, this makes it very easy to see the overlap profit. So we have something there that's been taxed twice, and also this whole period here. We have 3 months here. We have July, August, September, October, November, December. 6 months here. So we have therefore 9 months overlap. 3 months out of 6 times so this part effectively, 3,000, 6,000 profits, 3 over 6 times 6,000, 3,000. And then we have the 6 months here, which would be, that was part of the 12-month accounting period. Let's just confirm that. So 1st of July to 31st December. This is what's been taxed twice. That gives you 6,000. 9,000 overlap profits. How do we check that? We have 6,000, 12,000, 18,000 profits in the two accounting periods. But in the same time frame, we have tax 3 plus 12 gives you 27,000. 27,000 less your 18,000 equals 9,000, and therefore you can be satisfied that your thoughts, your calculations, your understanding is correct. I'll mention again for completeness purposes and to retain the knowledge, overlap profits would be redeemed, you could say, on cessation of trade or on the change of an accounting period date. That's when overlap profits would be relieved. Overlap losses work slightly separate. You can watch that in our other video. So therefore, we have now looked at all the issues relating to the second tax year. Two things to really and truly remember. One is there an accounting period ending in the second tax year? And number two, the second tax year always taxes 12 months of profits. Finally, we will look at cessation of trade. Cessation of trade, very straightforward, nothing further to consider. Let's say we have an individual partnership that has a 12-month accounting period ending 31st December 2020 and cease trade on 31st March 2021. Profits there were 12,000 and profits for the 3 months to cessation were 3,000. We do not need to consider opening year rules or actual basis because we can assume that the individual or partnership has been trading for a long time. So 31st December 2020, which tax year does it fall under? The 2021 tax year. 31st March also falls in the 2021 tax year. You tax everything. You tax the full amount in 2021. Say there were overlap profits brought forward of £5,000. That reduces your assessable profits and therefore you tax £10,000. I hope that's been beneficial. Please like this video if you found it of benefit. Comment if you have any questions, what your thoughts are, your understandings. Share with those that you may think it will also benefit, your colleagues, friends, those that are also studying. And please do not forget to subscribe. Most importantly, subscribe as we have many more videos planned. Again, I hope that's been beneficial. But yeah, please rewatch this video or any elements that do not make sense. And I wish you all the best. Thank you. Bye.